Hi, investors. Today we're going to discuss the business model of a company that has done fabulously well over the last 3-4 years. Started off as a company that was more or less undiscovered 2.5 years ago when it was listed on the NSE Emerge board as an SME. Today it's more or less a well-discovered stock, but looking at their plans and looking at the trajectory of the business, we feel that there's a long way to go over the next 3-4 years. This is a business which is in the Ayurvedic space in this country. Very unique because there are no real comparables as of today at this scale. Started off as a business that was selling OTC Ayurvedic products, medicines, balms, etc. Transitioned, I think, by 2020, 2021 into services. They set up daycare centers, hospitals, clinics, so that patients could actually walk in and avail of these Ayurvedic services, be it a consultation or be it the Panchkarma that you do in an Ayurvedic setup. And from 2020 or 2021, when they kicked off their first hospital and the first few beds, I think in the last 5 years, they've gone from zero to I think 3,500 beds as of today, right? And the growth has been phenomenal. Revenue growth northwards of 50% CAGR for the last 3.5 years. PAT growth more than 100% CAGR over the last 3 years. So this just shows that the business in itself has had immense potential. There's a lot of demand out there for these services, and for people who did not practice Ayurveda or have always been drawn towards allopathy, it seemed like something that was very unnatural or very different, and even a lot of people, including myself, were skeptical of this business maybe a year back. But looking at the numbers and looking, because we visited 2 or 3 hospitals, and looking at the people there, the demand there, even the best of skeptics have turned into believers. So I think what happened or what's causing this business to grow at such a high pace of growth are 3 or 4 reasons, right? One is excellent execution capability, right? There are 2 kinds of people in this world: people who talk, and then there are people who do, right? And the team, including the promoter Manish ji, are in the camp of people who can execute and people who have shown that they can execute. If you start a hospital with 150 beds for in an allopathic setup, although this is not a like-to-like comparison, but I'm just saying for the heck of it, it takes 16, 18, 20 months to break even. Jeena Sikho is breaking even 150 beds in say 2 months, 3 months, 4 months, right? So their payback periods are so small, their marketing is so on point, their customer service is so on point that individual hospitals, daycare centers, clinics, they have the shortest payback period when you look at the industry as a whole. Second thing is that they have made sure that the product mix changes towards higher margin businesses. 2021, when they started out, their focus was only on medicine sales, right? You could go to their website, you could look at the medicines listed, and you could order them cash on delivery or through the internet. By 2022, they realized that brand loyalty wasn't really picking up, so they shifted the product mix there. They shifted in what sense? Because as and when they started making hospitals and daycare centers, they realized that they have to force the people to sort of come inside and experience Ayurveda for what it truly is. So they stopped selling cash on delivery medicines, and it was mandatory that you, just like you visit a GP, a general physician, and he prescribes you medicines, you would have to go there, discuss your issues, and then the medicines would be given to you. So there was this shift that happened in 2021, which was in hindsight a risky thing to do because you're effectively changing your entire business model. But it turned out to be the right thing to do because there was a lot of traction that they got, and medicine sales, which were 100% at that time, slowly the product mix started changing, whereby services and people going to these hospitals became a larger and larger part of the product mix. I've just shown you the graph, in front of in the screen right now. You'd realize that medicine has gone from 100% to, I think, almost 50 to 53% today, or I think 47% today, and 53-54% comes from services, which is your hospital services and IPD patients. And as of today, what they've done, in line with their sort of philosophy of trying out new things, they've reintroduced OTC products. So they started off by selling OTC products, right? They completely shut that down in 2021 and started off their hospital services. Today, at least 6 months ago, the only way you could sort of have their medicines is either go to their clinic and get a prescription, or be a part of their Panchkarma services and avail of these medicines. Now they have sort of restarted their OTC medicine practice. OTC is nothing but over the counter, where you could call for medicines, or you could buy medicines listed on their website or through Zepto or through any e-com channels directly. And the reason that they've done that is that in the last 4 or 5 years, they've built so much brand loyalty and so much recall within customers that now selling these OTC products is going to be a cakewalk, right? So they shifted from a business model of selling OTC to hospital services. The reason was to build brand loyalty. They've built that out brilliantly in the last 4 or 5 years, and now they've reshifted again. They've not reshifted, they've just added a layer of selling OTC products again. And the brilliance of this is that OTC products in Ayurveda have incredibly good margins. 70, 75, 80% gross margins, 20-25% net margins. So it is just sort of a distribution game that you have to sort of ace now. The most important thing, when people talk about businesses, the only thing that people sort of care about is are there sort of tailwinds or headwinds in this business? And the answer to that is although this is sort of a niche business when it comes to the listed space, there are enormous tailwinds when you talk about Ayurveda. First thing is that what we need to realize is that what I think is that the demand that we are seeing right now, be it if you walk into a Jeena Sikho hospital or a clinic, you'll find them packed to the brim, right? 75, 80, 85% occupancy is not a joke at all. I think the reason for this, and this is a personal opinion and I could be wrong, but the reason for this is that I think all of this is more or less pent-up demand. Now, when I say pent-up demand, what we need to understand is that there has been a strategic shift when it comes to signaling by the government and even by private institutions since 2014. It's just that since they had no representation in the listed space, it was not very visible to public market investors. What happened in 2014 was that the Ayush Ministry, Ayush is an acronym for Ayurveda, Yoga and Naturopathy, Unani, and Homeopathy, and S stands for, I forget what S stands for, but so Ayush is an acronym for the industry. Ayush had no real representation when it comes to and government institution. It was under the Ministry of Health. It was just a department which had no face. The government post 2014, I think post the new government kicked in, they sort of spun off the Ayush department from the Ministry of Healthcare into a different industry altogether. And what that did is that it sort of became a signal that the government is very keen on it is very keen on making Ayush a mainstay within healthcare, right? And in hindsight, this is visible from two things. One is the fact that the amount of money that was allocated to Ayush, 2014 it was 300-400 crores. As of today, it's I think roughly 4,500 crores. The amount of money that the government allocates so that the Ayush ministry can carry out its activities, right? And the entire life cycle, what we've studied, what happened since 2014 to 2024, two or three things were key. One is that it gave amazing public visibility, right? Right from the Prime Minister, having a National Yoga Day, to the government publicly sort of advertising, Ayurveda as an alternative medicine. It sort of reinforced public opinion, that this also is something that they should look at. Anyway, Ayurveda is an ancient Indian medical science that's, I think, roughly 4,000, 5,000 years old. But as in when, especially, people of our generation or Gen Zs might not, maybe they do or maybe they don't believe. So, this sort of push from the Ayush ministry and from the government sort of may helped it become mainstream, right? Another pivotal thing that happened in 2017 was that Ayush was integrated into public health care. So the National Health Policy in 2017 formally supported a mainstreaming of Ayush. The document listed for the first time ever Ayush as a formal medical practice, Ayurveda as a formal medical practice, and this just completely changed things around, right? I think one of the best examples that I sort of now see at that time was the rise of Patanjali. I think it went from nowhere in 2013-14, I think a 200-300 crore revenue brand, to a 10,000 crore revenue brand in 4 or 5 years. A lot of that had to do with, of course, Ramdev Baba's personal aura and personal marketing. But I think correlation is not causation, but I think something had to do with the fact that, the government also supported this entire move of Ayurveda. Then COVID accelerated demand post 2020. And as of today, what's happened is that this industry more or less effectively has become institutionalized, right? And it has gone from a fragmented traditional sort of market which nobody used to speak about, say pre-2014. It has gone from a $2.5-3 billion industry, if I have to quantify, to a $44 billion industry as of today. $44 billion, $2.5 to $44 billion in 10-12 years is no joke, right? And all of this, the entire industry, if I would remove, I think, Dabur from it, the entire sort of move, and even Patanjali was recently listed, sort of merged into Ruchi Soya. The entire move, or the most part of the move, does not have a representation in public markets. The entire move and the entire sort of profit pool is still there in the private markets, at least most of it. So what this means usually is that when Jeena Sikho came into public markets, there were a lot of skeptics. Even I think there are a lot of skeptics as of today. But the reason for that is that we've never had that sort of profit pools that we could see play out. But that has not been the case, right? They very well played out in the private space. Now, just to keep how effectively the government has helped, Ayurveda, is that this 4,500 crore worth of funds that get allocated every year, they get allocated in such a way that I think almost half is spent on autonomous bodies that do R&D, right? So these are institutions that write research papers and effectively do clinical trials, improve the efficacy and the messaging of Ayurveda as an industry. I correlate this as the mutual fund Sahi Hai campaigns, where the government is indirectly and effectively advertising for the private players that mutual funds are great institutions. and you should invest in them. These are potent institutions that will increase your wealth. So this, all of this is in some way indirect sort of marketing, and has helped Jeena Sikho, I think, quite a lot. The second thing, and the most important thing from a business angle, is that it has sort of led to formalization of Ayurveda and Ayurvedic infrastructure. Now there is a term which is called NABH. If your hospital is accredited by NABH, which is National Ayush Bed or some, I just write it on screen. I've forgotten the full form. Apologies. But only and only if your hospital is accredited by NABH, only then you can be part of multiple the government panels or state government panels from which Jeena Sikho actually drives a lot of business, right? So this money has gone into setting up these accreditation norms. This money has gone into setting up these standardized, sort of formats, which has actually helped JSSL as of today. And third and most important thing is that any Ayurvedic product that comes out has to be certified by Ayush Ministry, right? Like how food products are certified by FSSAI, Ayurvedic products need to be certified by the Ayush Ministry, right? And again, this has been because the government's been behind it for the last so many years. And this sort of gives credibility that whatever you're buying or whatever you're consuming is certified and safe, and that's why I think a lot of these products have taken off in the last 7-8 years. Again, the data that we discussed, from $2.5 billion to $44 billion of revenue. That means, just imagine the amount of money that has been spent by private players to set up capacity, to do their marketing, and all of these things have a second order effect, right? So kudos to all the institutions that have sort of helped building this out. And that's why I think that this has been a 7, 8, 10, 12 year effort which has sort of led to demand. And the demand that we're seeing in Jeena Sikho, be it hospitals, be it medicines, be it OTC products, is actually pent up demand. So they started our hospitals and they did a little bit of marketing, and occupancy levels are already at all-time highs. That means that the public was more or less ready and waiting and searching for something like this to happen, and so that they could go there is what my thought process is. So coming back to and continuing our thesis on why this is a really good business model, apart and after government tailwinds, when you talk about the healthcare industry as a whole, any report that you pick up or anyone that you talk to would tell you that why is healthcare a structural trend. The reasons are more or less listed and well known. It's chronic diseases, lifestyles, lack of maybe me time or stress and all of that. But after having seen all of this, if you look at listed allopathy hospital players, you would find that most of them are growing at maybe 14-15% sort of volume growth, and maybe 3-4% sort of growth in their pricing. So 18 to 20% earnings growth is what's expected in allopathy hospital players. And that's why this makes it much more interesting. This is the only player that has sort of grown his PAT CAGR by 100% in the last 3 years, and still as of today we don't find sizable competition. So it almost is too good to believe, and I hope it stays that way. But what is remarkable is when you look at the unit economics of how much it costs an Ayurvedic hospital to be set up. If you look at the listed sort of allopathy players, it could be Fortis, Max, Yatharth, and we've sort of attached a table here, you will realize that capex per bed ranges right from 50-60 lakhs to almost 1.5 crore or 1.3 CR. And the reason for that is there are two types of capex that happens in an hospital. One is greenfield, whereby you buy the land, you construct the building, and you refurbish it, you buy all of the equipments, be it X-ray machines, CT scanners, MRI machines, make a cath lab, and do everything that is required to build out a super specialty hospital, and that's why it's very expensive. Or you have brownfield capex, whereby you sort of either lease an existing structure, lease an existing building, and then you refurbish it from inside. Greenfield capex is very expensive, and that's why you would find that greenfield capex per bed would be on the higher end, 2.5, 3 crores, and brownfield capex per bed would be 50, 75, 80 lakhs, and depends on the location, geography, area. Having said all of this, what is remarkable is that if you look at the unit economics of Jeena Sikho, you would find that 3.5, 4 lakhs is the kind of capex that they do per bed, primarily because of two reasons. One is that the company and its entire sort of structure is completely asset light. They do not own any of the hospitals, clinics, or daycare centers that they've sort of bought out. Everything is on rent and lease. Nor do they own any of the factories which produce their OTC medicines. Again, it's either a loan and license agreement or it's a third-party manufacturer. So throughout the life cycle of whatever they do, they're completely asset light. And the reason that capex per bed is 3.5, 4 lakhs, there's a specific reason for that, because if you were to walk into a Jeena Sikho hospital today, and I've attached some pictures because we've gone, you would realize that once you cross the reception area, there is nothing that it doesn't really feel like a hospital. It feels like a hotel, more or less, right? There are multiple rooms, multiple standard of rooms, because effectively in a hospital like Jeena Sikho, in Ayurveda, you are not treated through allopathy, right? So if you're there for knee pain, it's not like they are going to do a knee surgery. And in Ayurveda actually teaches you a way of life. So when you get admitted for knee pain, they sort of make sure that when your panchkarma happens, you get detoxed. They would apply some balms. You would be taught to do yoga. You would be taught to eat right, and that is what Ayurveda is. It teaches you a way of life instead of attacking the root cause through allopathy means. And most importantly, so what I am trying to say is that the capex per bed in an Ayurvedic setup is very minimal, because it doesn't have all the frills and fancies of an allopathic hospital. There are no fancy equipment. These are just standard rooms. Some rooms are better than the others, and tariffs are higher there. So and that sort of drives capex very low. And in the case of Jeena Sikho, what they do is that the owner of the property, it's his responsibility to sort of refurbish the property and make sure that furnitures and fixtures are there. Jeena Sikho only pays a limited amount of the upfront sort of refurbishing. The rest has to be borne by the owner, so they are sort of minimizing their cost there also. All of these properties are on rent and leases, and that's the beauty of it, because effectively the strength of Jeena Sikho and its branding is that if they open a 150, 180 bed hospital, I think we had gone to a Navi Mumbai hospital, which was a 150 bed hospital. What we learned from our interaction there is that it took them 3-4 months to break even, and at the end of by 15 odd months, they were already operating at 75-80% occupancy, which is extraordinary in terms of the industry. In terms of the hospital industry, operating at 80% or 85% is a dream come true. So this is one of the secret sources of Jeena Sikho, is that their brand pull is so strong that you open a hospital, it breaks even in 4 months, and 15 months the hospital in itself has become a free cash flow machine for the company. And that is one of the key strengths. Apart from this, their entry into OTC products is what I believe will be one of the biggest sort of drivers of growth for the next few years. Now, why OTC for Ayurveda is an amazing product is, like, unlike generic pharma, there is no real competition as such. I mean, there are competitors. You have Baidyanath, you have You have other, Imami, and you have other players that are doing OTC Ayurvedic products, but they are far and few. In generic pharma, if you come up with say a cholesterol pill, you will find that you have that price advantage for a month or 2 or 3 months before 10, 12 other firms come up with the same pill, because in India in pharma nothing is novel, it's all generic, right? So it's just, for the lack of a better word, it's just copy paste. So and you would notice that in pharma, after you come up with a new pill, 12, 15, in roughly 8 to 12 months, the you have to reduce the prices because your competition has reduced the prices. And it's very tightly regulated. It is very expensive to sort of do these clinical trials and then come up with a drug. It's the life cycle of coming up with a drug in the generic pharmaceutical industry is quite big. But when you talk about the Ayurvedic industry, we were surprised to know is that there are no pricing caps. Unlike generic pharma, you have a list of essential medicines that have a pricing cap. Here there are no pricing caps. You can price it as low or as high you can, which is a very good thing, from a business POV. Second, what we've realized is that the bigger the brand name you are, the better the pricing you can. For example, Jeena Sikho has sort of a medicine that helps in indigestion. Baidyanath has the same medicine for $150, but Jeena Sikho's priced it at I think 450 or 500 rupees, and it's still selling through very well, which shows that pricing is not sort of inelastic in this industry. Your brand will drive the pricing. Amazing margins, which is the main sort of thing and sort of attractive feature for business owners. 90% gross margin, because they're in these products, because they have distributors and stockists. At the end of the day, roughly 20 or 25% of the net margin is still left in the books of Jeena Sikho. So we think that this is going to be one of the biggest drivers for the company in the years to come. They have sort of launched their first product, which is called PSL. It's already done 10 crore of sales a month. That is 120 crores of sales. Their guidance is in that in the next 2-3 years, their OTC product sales are going to be more than 350-400 crores. And if that happens, and if they can do a 20% margin, that's 85 crores of PAT for you by FY 27-28 incremental, and just by cross selling. So what is essentially happening is that Jeena Sikho is turning into a machine that is going to keep churning out new products, keep cross selling them, keep upselling them to the same set and new customers, and which is going to be incrementally very, very positive for the company. Before we jump in any further, I just wanted to throw some color on and sort of quantify the kind of growth that we've seen, right? So in front of your screen, I'm just going to sort of graphically show a few metrics that are important, and also talk about what we learned at the scuttlebutt of the 2-3 hospitals that we did. First is the fact that just the funnel of how Jeena Sikho acquires a patient, right? It's either through, they have a very, very strong social media presence. You look at the YouTube channel, look at the promoter's YouTube channel. I think combined would be more than roughly 2 million subscribers for the YouTube channel. So social media is one of the first funnels to acquire a customer. After that, you have sort of 2 ways, whether you sort of get a video call in to one of their teams, or walk into one of their daycare centers or clinics. That is step 2. The charges for, let's say, a OPD consultation will be 500, right? After your OPD consultation is done, you sort of become an IPD patient. Let's say if you want to get a Panch Karma done, effectively you have to then stay into for 7, 8, 9 days in a Jeena Sikho hospital. For people who don't know what Panchkarma is a simple sort of a 5-step process whereby they, have them stay with you for 7, 8 days, and help you to detox your body and do yoga. There's mindfulness. There is multiple other things sort of that, it's more towards slightly more towards wellness, and they help you teach the way of how to live a life well. So that is, in Ayurveda they call this IPD. After that, you, as and when you sort of finish the Panchkarma process, you have to then take medicines for a few weeks. So that is another point of sale. So right from the first time you call them, you sort of have already become a revenue pool, and as and when you go deep, you sort of become a bigger revenue pool for them. And this is a recurring thing. So they earn 500 rupees from an OPD consultation. They earn 8,000-9,000 rupees if you sort of become an IPD patient and do Panchkarma with them. Then 3-4 months of recurring medicine sales. So again, you become a revenue pool for them. So our sort of thought process is that, and the mental model to think about a business like this is that, once a customer is in, he's in for quite a long time. And JSSL or Jeena Sikho tries their best to cross-sell and upsell all of their products. Second is the pace of growth. Again and again we stress on the pace of growth. Just look at a few sort of graphical insights. Just look at the growth. Right now you will see the growth of the OPD patients over the last few years. Then just look at the growth of their IPD patients over the last few years. Look at the growth in the sales of medicines that have happened in the last few years. And now look at the growth of sort of the incoming video calls that they get over the last few years. And so all of these graphs are arranged here, but what you will find is that these numbers are staggering. The pace of growth is staggering, and it shows that there is a real demand there, right? Because marketing can only get you so much, right? It cannot keep sort of a customer loyal for a long time, right? Because targeted marketing is short burst usually. Here what we found during our scuttlebutt and during our interaction with the teams, in both the hospitals, is that there is one thing that everyone talks about, and that is the face of the company, the promoter himself, Acharya Manishji. What we've learned is that he's built such a strong personal brand around him, in the last 14-15 years, that the moment a new sort of hospital is opened, the first thing that they do to increase occupancy is have a session of Acharya Manishji. And once that session is done, that sort of hospital becomes and that location becomes very well known among practitioners and people who want to sort of get themselves involved in Ayurveda, and that is their marketing. So for a company like Jeena Sikho, advertisement as a percentage of sort of revenue is very low, and that's because the personal brand that the promoter has pulled out and sort of worked upon has been immensely helpful in terms of how things have shaped up for the company. And I think this is one of the rare, if not the only, I think this has to be the only company in the healthcare space, especially hospitals, that has started enjoying a 45% EBITDA. 45% EBITDA in the healthcare space is unknown, is unheard, and can never happen in allopathy. And the Q3 FY26 results, where they had 45% EBITDA, a lot of people have thought that it's unsustainable. But if you look at how the numbers stack up, what we realized is that, again, since the company is so asset light, and since every incremental revenue, once the occupancy sort of becomes in a single hospital becomes more than 60-70%, every single individual cost unit in this company becomes a free cash flow machine, right? And that is why we think that these margins are not only sustainable, they might even inch upwards in the next few months and years. And we have all the reason to believe that things are going very well for the business and in the right direction. So what we learned from this interaction from our scuttlebutt is that the promoter is one of the most important faces of the company, and the fact that there are still multiple legs to go in terms of the growth triggers that are yet to play out for this company, and more of that is something that we'll be discussing. So we've sort of discussed how fast and efficiently Jeena Sikho has scaled up in the last few years, how their product mix has changed, how they stack up against allopathy hospitals in terms of unit economics, why has there been massive tailwinds both in terms of government policy and also demand from the private side. And it feels like a story too good to be true as an investor. Just wanted to sort of discuss two things now. One is the kind of growth triggers that have played out both in the last 1-2 years and that are going to play out in the next 2-3 years. And second and most important, a few data points that we wanted to sort of draw your attention to. First, I think the number one and the biggest growth trigger that played out in 23-24 was the fact that these private insurance companies actually started accepting Ayurveda. When the National Medical Policy in 2017 adopted Ayurveda as a formal science, it took, I think, almost 5-6 years for both government and national insurance players to finally get Ayurveda in terms of as one of the beneficiaries of cashless treatment. When Jeena Sikho first started out their hospitals, only reimbursement was available in their hospitals and daycare centers. Reimbursement means if you go to the daycare center hospital, you have to first pay for it and then you will be reimbursed by your insurance provider. In FY 23-24 that changed, and now patients can avail cashless treatments as well. So no capital outgo right from the beginning. It just has a very big sort of a psychological impact from a patient's POV, whereby when you, let's say, do a 7-8 day treatment and at the back of your mind you know that you don't have to pay for it, then you would actually sort of not postpone your decision to go into a Jeena Sikho hospital or a clinic and get a few things done. So that, I think, had a big impact. They mentioned it several times on the calls, they mentioned it several times in the media too, I think, that cashless treatments by both private insurance and through GIPSA basically covers 4 government insurers. The entire cashless treatment sort of really gave them a good boost in sales. Second thing, I think one of the big triggers that might play out in the next few years, and which I think the company is also keen to see it play out, is the inclusion of Ayurveda in Ayushman Bharat, right? So Ayushman Bharat is basically a health card which the government has given to people and people below a certain sort of living standard or a certain income group, whereby they can avail 5 lakh worth of insurance throughout the year in any hospital, of course government hospital or any other accredited center, if Jeena Sikho sort of or Ayurveda sort of gets involved within Ayushman card, which it hasn't right now within Ayushman Bharat. Then there could be a massive surge in volumes because it would sort of open the doors for a lot of occupancy going up, because especially given the fact that a lot of JSSL hospitals are already in tier 2 and tier 3 cities of the country. The only sort of drawback here would be that if this happens, then receivables obviously will go up because it takes time to get your money back from the government, in any case. Second sort of big growth. I think the third sort of the big growth trigger that's there in the offing is their 2 or 3 sort of strategic tie-ups that they've done, right? One is their tie-up with Interior. Interior sort of is one of the biggest pharmaceutical distributors in the country. Has access to 10 and a half, 11 lakh stores, pharmacy stores across the country. So they've done an exclusive tie-up with Interior where they'll be sort of the sole Ayurveda medicine provider, and Interior will help distribute these products around the country. I think this will give a very, very, very big fillip to their OTC sales that are going to come through. OTC is obviously one of the biggest sort of a sort of fillip, or I would say one of the biggest sort of growth drivers in the next few years. We've already discussed that, but just to add to that, the management has more or less guided that 500 crores worth of OTC sales could happen in 2 years, which is a big number. Almost 75-80 crores worth of PAT just from OTC sales, and this is all incremental PAT. Third is now their tie-up with Chandan Healthcare. Chandan Healthcare is a diagnostic arm. We've discussed it before in one of the videos in my timeline. What's happened is that, and this is something that we found during our scuttlebutt, is that when you sort of enroll yourself for Panchkarma, you have to get a blood test done twice during your stay. And Jeena Sikho has effectively outsourced these blood tests, including the entire capex, the fittings and everything, to a company called Chandan Healthcare. Basically, Chandan will come into all of these hospitals and daycare centers. They will get a room, right, which Jeena Sikho will allot them. They have to do the furnitures, fixtures, the path lab machines. They have to do the blood tests, and the revenues will be shared. Jeena Sikho is sort of targeting 3 lakh rupees a day in terms of the revenue that they can generate from diagnostics. So that is something that's not yet kicked in, will kick in maybe in a quarter or two fully. And third is their tie-up with a company called Sai Kartar Shopping, which is basically into, again, sale of Ayurvedic products, but they have a very good database and a very good distribution system. So their tie-up with Jeena Sikho gives Jeena Sikho access to a lot of distribution, a lot of inbound leads. We'll be talking more about this in our next video. Effectively, what Jeena Sikho is doing is that it is tying up with all of the important players in the ecosystem, and in my view, it is making sure that none of these players sort of ever become bigger than him, because the status quo is in such a way that Jeena Sikho always has the upper hand in all of these deals if you look through them deeply, right? These are the 2-3 big triggers that are set to play out. And before we finish, why we are so bullish is that I think the management guidance here is they will go from 2,800 beds to 7,000 to 10,000 beds in the next 3-4 years. The kind of growth that you will see through this is going to be incredible. I have just left a note at the end of the video of how we think about the valuation and how the numbers will come through. But before we go into that, what I really wanted to say is that this is one of the managements that has never sort of missed their guidances, right? They've always been consistent. So our second sort of comfort here is the fact that we are backing a management that has the ability and that has showcased the ability to execute. And that is one of the key factors for us. Great guidance, high growth that is sustainable, and managements that have proven capacity to execute. This is our entire investment thesis for a company like Jeena Sikho. And I will quickly run you all through the valuation. I've actually left a handwritten note at the end of the video in one of the comment sections on how we think about the valuations and how the numbers will stack up, and how we look at the stock maybe 3 or 4 years down the line. Do have a look, and thank you for sitting across through the length of the video.